Hi, this is Natalie Sanford. I am um, recording this for our Chapter 25 Teach and Learn or Teach and Share. It's going to be for LLCs or limited liability companies. I was able to teach my husband about this. And we'll just start out with the definition and the history of an LLC. A limited liability company is a company where the members are not personally liable for the company's debts. It also allows pass-through tax benefits. The first LLC laws were established in Wyoming in 1977. And now there's a widespread of LLC practices and statutes in every state. And this is the dominant business entity for new businesses. The advantages of having an LLC are that there are member protections. So members are not personally liable for the company's obligations or torts committed by other members of the company. There is an exception to this rule, and it's if wrongful or acts or negligence occurs, then the person that committed those could be personally liable for those. The main reason why you'd want to have an LLC is the tax benefits, and the benefit is what's called a pass-through taxation. So a single member LLC are taxed as sole proprietorships, where multi-member LLCs can choose taxation as a partnership or a corporation. They also have flexibility to reinvest the profits within the LLC and only be taxed on that investment once. So there's flexibility in the management. So in informal structure, there's no requirements of really like formal or annual meetings or detailed minutes. So LLCs are allowed to have members that are foreigners or that are other entities, other business entities. And this is not like an S Corp, which requires, it does not allow for a foreigner or an entity to be a part of that. So creating an LLC, I've actually done this a couple of times. It's really, really easy to create it. And all you have to do is file documentation. So you file with wherever the state laws are that you reside, you have to follow their specific protocols. So wherever the company is formed, you have to go by their laws. You have to have an organizational document. So you have to file certificate of organization or articles of organization in some states it's called. And it must contain the business name, address, registered agent details, and at least one member's name. An operating agreement is not required in an LLC, but it's advisable to have a detailed internal agreement covering the operations and running of the organizational operations. So you just file online usually. You must make sure the name is available. You have to file and get the name publicized. In some states, this is a fictitious name registration, and it has to be cleared, and you just pay the state's fee. For the management and compensation of that, you have to have an operator's, you're not legally required, but it's expected to have an operator's agreement where you establish bylaws and partnership if you have more than one person running the LLC. And it should contain detailed internal rules, voting processes, management procedures, financial allocations, and amendments, how they are going to be made and voted upon. So there's some options as far as management. All members have authority, duty of care, and fiduciary responsibilities are shared. And the manager, that's when a member manages it. If it's a manager managed LLC, only managers have authority and the associated duties that go with that. So it wouldn't be an equal split among everybody. It would just be the managers. You can have distributions and compensations for that. So you have profit allocation. So according to whatever the operating agreement is, the managing members may receive compensation. The default is without an agreement, everything is back to wherever anyone initially contributed. So it would be dependent upon that. When you dissociation, so when you dissolve, if it's a member dissociation, a member will lose management and participation rights. The duty of loyalty does remain until through the pre-dissociation, and then it would the benefits would be cut off, or the responsibilities or loyalty once it's officially dissolved. Dissociated members may be entitled to be bought out. That is an option. If you disillusion the LLC entirely, members who did not wrongfully disassociate may participate in the collection of assets, liquidation, and distribution. So the debts need to be settled first, and then the remaining amounts are distributed equally, and after you return their capital investment to them. So though it's not required by the state, this is a quote I found in the book that was helpful, though not required by the state, it's important to write out an operating agreement. Unlike the certificate of organization, which has very little information and is available to the public, the operating agreement is typically very detailed and held internally. So when I formed I formed a sole proprietor LLC, and I just did everything by myself. I was a one-person business. It was a little bit more simple. I didn't have anyone to sue or be sued by as far as articles of incorporation and the bylaws and things like that. But my current position, where I own a grocery store and I partner with grocery outlet, we did operate under an LLC, which is you have to file the articles of incorporation, you have to get your fictitious business name and doing business as. And with grocery outlet, they prefer that their business model is family owned and operated. So they prefer the owners to be a married couple or siblings or parent-child, something like that. And they know that forming a partnership can be complicated, and it can get a little messy with the details if the articles of organization or the bylaws are not really specific. And so it's easy to break a partnership with someone that's not in your family. But when you have a vested interest in the family business, it's a little bit harder to, dissolve those. And so it's an interesting business model because grocery outlet does not get into the details of the LLC itself. They just require that you have one. But they do tend to gravitate towards couples, families, things like that, to kind of mitigate some of those problems that could come with a partnership that's just two friends or two, business partners. So that's LLCs, and I will talk to you later.